So, Larry, I think you get a victory lap this week because over 5 years ago, you wrote in the Financial Times, and I'll quote it, the Fed could inject much needed confidence in the economy today and minimize future risks by announcing and following a strategy of not raising rates until it sees the whites of inflation's eyes. Now, as best I understand, that's sort of what Jay Powell said this week, isn't it?
I think it's more or less exactly what he said. I think he said two important things. He made clear that the 2% figure was a two-sided target. And after a decade of being below 2%, it would be okay with him if we were above 2% for a while, and that we weren't being religious about 2% as the ceiling. That's what I and many others have been advocating for a long time. And he also said that he was going to reject what has been a Fed staff preoccupation for a long time, the Phillips curve idea that we should stop the party before it gets started by raising rates when it looks like the economy is going to be really strong and unemployment is going to be low and wages are going to rise fast and the last people to be hired are going to be hired and employers are going to be reaching for less skilled workers and those with some blot on their backgrounds, that we're not going to cut off the economy's growth when those kinds of things happen until we actually see inflation materialize. And I think those are two welcome and frankly overdue changes in perspective from the Fed. They're things that I've been calling for half a dozen years in recognition of the fact that our economy's basic problem isn't an inflationary gap. It's a deflationary gap where savings exceeds investment, and that pushes interest rates too far down, causes money to flow into liquid assets that then get inflated and cause bubbles, and risks too much sluggishness in the economy. So I think the Fed has moved a substantial distance in the right direction. I think they've still got some way to go in terms of recognizing the limits of what they're able to do and putting the right kind of pressure on other policies to push demand forward.
Well, let's talk about those limits. Exactly. Glenn, let's assume you agree with Larry that essentially, more or less, better late than never. But at the same time, is this the cure for what ails us right now? Because this doesn't get rid of the coronavirus. It doesn't get increased productivity. It doesn't get growth going necessarily, does it?
Yeah, I think it's a good step. I, too, have called for average inflation targeting for some time, but it's not a free lunch. I mean, it does give the Fed room to let the economy run hot. That's a good thing. It gives room for interest rates and yield curve to steepen. That, too, would be a good thing in the present environment. However, it may cause misallocation in capital markets relative to, say, a fiscal policy response. And it isn't going to cure the coronavirus or supply side. So, yes, we can say good job to the Fed for the Jackson Hole announcement, but I don't think it's time for the Fed, at least, to be taking a victory lap. I think Washington needs to focus on fiscal policy. Chair Powell's doing his part, but it's only a part.
Is there another danger, Larry, actually, which we might call mission creep, borrowed from the military and I think Vietnam? Is there mission creep here? Because as you read what Jay Powell had to say, he was talking about all sorts of things, like really fixing inequalities in income and wages, addressing problems of municipalities. Is that something really the Fed is competent to do?
I think Glenn and I are, again, in violent agreement. What the Fed did is necessary. It is a long way from sufficient to address America's economic challenges. Because the Fed, frankly, has been more successful and more competent in the last few years than other parts of the government, there's a tendency to turn to the Fed to solve every problem. I don't think the Fed can fix the environment and make America green. I don't think the Fed is the right instrument for dealing with struggling municipalities. I don't think the Fed is the right instrument for addressing racial inequality. So I think the Fed's new emphasis on a strong economy, its move away from a single-minded focus on preempting inflation is overdue and appropriate. But I don't think we should turn ourselves into an economy run by the Fed. Look, our problem is, one of our problems is that we've got too much leverage and too much debt. And the only way the Fed has of stepping on the accelerator is to do things that encourage people to take on more debt for more purposes. And not all problems can be solved with more borrowing, especially when too much borrowing is a problem. And so the other part of what Chairman Powell has been saying in recent months that I've been applauding has been the emphasis on what the rest of the government has to do.
Right. Well, Glenn, I want to come back to you because you hear Larry, and it sounds right to me. We can't expect the Fed to fix the climate problems. We can't expect them to fix 400 years of racial inequality. But do they have some obligation to address some of the inequality financially? Because some of their remedy for the economy, for good and sufficient reason, has really benefited the wealthiest, the owners of capital, and disbenefited the rest.
Yeah, that's an issue, David. I mean, obviously letting the economy run hotter will help marginal workers, and it may help help resolve the racial income gap. But in terms of wealth gaps, as you push interest rates down and reflate assets, that's good for people who have assets, but not for those who don't. So I just don't think the Fed is the right tool. We do have good fiscal policy tools and regulatory policy tools for social justice, and we should be using them. But I think for the Fed, that's a very blunt instrument. To care, yes. To think it can solve, no.
Does that extend as well, Larry, over the municipal loans, the Main Street lending program?
I think the Fed is at the limit of what it should be doing. I think the better way to be doing this would be to do what we should have done 6 months ago at the beginning of Corona and pass substantial new assistance to state and local governments. It is madness that teachers are being laid off in the midst of what the economy is going through. It is madness that municipal hospitals are laying off nurses in the midst of what we're going through. It is madness that security forces, fire, what have you, in cities are being reduced in the midst of all the challenges that we face. We should be doing much more directly from the federal government to the state and local governments, rather than having the Federal Reserve be supporting problematic credits. And just to say one other thing, which links our two discussions, Glenn's right about we have tools for social justice. The most important of them is progressive taxation. And that's why it is important to be moving to make our tax system more progressive.
There you go. And we come right back to the economic plans of these two candidates for president.